So with the new year upon us, a lot of people are looking for new investment opportunities. Everyone really wants to know what the hot thing is going to be in the next year. So in this particular video, I wanted to go over three growth stocks that I think will do very well in 2014. I believe that these stocks will do very well over the long term, but I also think that they're poised to do well this year. And in this video, I'm going to reveal what those three stocks are and go over why I believe each one of these is ready to do well. So just a quick note about the stocks I picked. A growth stock is a stock that is priced well above what's normal for the profits to earning ratio, and this is due to fast revenue growth. So these companies are growing very quickly, and whenever you're investing in a growth stock, there's always a risk that the stock will pull back. At some point, investors might think, ooh, we think growth is slowing down and the price could drop. I particularly selected three stocks that I believe have long-term growth potential, even if they slow down for a quarter and drop a little bit. Just hang on. I think these will do well in 2014, but I also think they'll be even better in 2017. So I try to keep stocks in mind that had a future and weren't just hot briefly that you need to jump off at any point. These are stocks that you can buy now in 2014, get a great return, and continue to hold. So the first one I want to go over is LinkedIn. And if you follow my blog at all, you know that I recently purchased this as the first purchase for my How to Invest HQ portfolio. And what that is a public portfolio that you can follow. I'm just, broadcasting all my trades. I'm not really trading much. I'm actually just taking a couple positions and slowly adding to those over time. And I'm picking LinkedIn because they got great revenue growth. They're growing extremely fast. Even that they started to slow down a little bit, but we're still seeing 10% quarter over quarter. And that's almost 50% a year revenue growth. They're still hitting those kind of numbers. So that's great. They're really stable because people need to use LinkedIn to find jobs. So they're not going to give up. They're not going to get bored with it because if they need a job, they need LinkedIn. That's the bottom line. And I think that they have a really cheap price. I was able to get in just over $200, $200.66 to be exact. I don't think that's going to last. And in fact, it's already gone up quite a bit, and I just bought it earlier this week. It's already now like $217 a share, but I still think that that's a bargain. I mean, LinkedIn was up to $250 a share a couple months ago, and LinkedIn today is no weaker than it was at $250. In fact, it's stronger, if anything, because they've had another couple months to grow and build their revenue base. So even at $217, still a good buy for 2014. The next stock I really like is Zillow. I've discussed this in the past as well. And what Zillow is, if you're unfamiliar, it's by far the #1 leader in online real estate listings and services. So what users can do is post up houses and apartments, and people can look and see what the price is. And Zillow also sort of gives estimates and has its own sort of formula for that. And everyone from realtors to home renters can use this site to try to either sell or buy a house or an apartment. It's become one of the most popular sites in the United States. It's actually the 56th most popular site according to Alexa.com. That's a rough estimate, but 56 it's well up there. It's a major player in the market. No other real estate site is close. And just to give you an example of how quick this site is growing earnings, they're only pulling in $17 million in annual earnings in 2009. And last year, 2012, that was already up to $117 million. And this year, they'll be around $200 million. So they're growing revenue so fast. And their market cap is just so low for this kind of revenue growth. I mean, Groupon, which is a site that has, to me, no real business model, is more than double the value of Zillow. Like, if we're projecting into the future, we see Groupon as a service that allows businesses to advertise special offers, which usually don't work out good for the business. It's got huge competition, and its service is really no different from Living Social or the other competitors that have kind of copied their model. And yet we have Zillow, who's by far the #1 leader in this space. No other site comes close. They're basically at the helm of buying and selling a house in the United States. Like if you want to buy or sell a house, you're going to use Zillow. It's a $1 trillion industry. How can they be valued so low when they're growing revenue this quick? I mean, this is just not an exciting stock. People aren't excited about functional businesses, but when that revenue keeps going up, they're going to have to jump on board. So Zillow has also gone up decently in the last week, since I talked about it. Obviously not correlated to me talking about it. I don't have that kind of following, but it is definitely a stock to look at, even at its current price. Finally, I really like Yelp. It's similar to Zillow in that it's basically a nationwide gateway for restaurants and food. It's very popular in really nationwide in the United States, and I'm sure it's kind of spilling over into Canada as well, just because what Yelp is really popular is as a social networking site. So what people like to do is like to go around from city to city when they're on vacation and try out new places to eat and then write about their experiences on Yelp. And sort of people that write about their local cities as well, hitting all those spots. And people love sharing their reviews on this site. So like people naturally from the United States go to Canada and Canada to the United States. So it's kind of spread into Canada pretty well. And, it's also, even though it was sort of a US based site, since a lot of travelers like to travel to new places and write reviews, a lot of reviews are showing up for restaurants in other countries. Like all of Europe is basically practically charted. Popular tourist areas have tons of Yelp reviews. So it's really become this sort of worldwide global resource per se. It's mostly popular in the United States, but reviews are getting picked up for sure for places all around the world. And that's the great thing, is that all this content is being written by users. They don't have to pay anything for it. They're constantly getting new reviews every day. And people just like to post. They get a kick out of posting and getting, voted helpful or funny. So they keep posting. And people are starting to go here for pretty much everything, especially in cities. It's like you can actually look up things like lawyers or doctors or repair shops on Yelp rather than just restaurants. And this sort of success is showing, and they're actually the 36th most popular site in the United States right now, according to Alexa. That's pretty, that's up there. That's, they're competing against sites like Google and YouTube and CNN and Live and MSN.com and all those other, sites which are, they expect to occupy the top, the top 20 spots. So to be 36, they're a mainstay in popular culture for sure. And one thing I didn't include on this slide, which is I really like Yelp for, is that when people are looking up reviews for restaurants or services, they're looking it up because they're ready to buy. They're ready to go out to a restaurant or they're ready to purchase a service. That means when someone's at that stage in the buying cycle, any advertisements that cater to that person are very likely to lead to conversions. So Yelp's actually able to charge a ton of money for its advertising, and that's why they've been able to drive so much revenue growth lately. And like I was saying before, be patient with these stocks. They're growth stocks, so they tend to pull back once in a while. Just ride it out. They're good companies. They're not going anywhere. And hope you enjoyed this video. Subscribe for more stock analysis and updates.